Ladies and gentlemen, how are you? I want to pull this up. Now, I want to show you right now how not to trade and what's not a good trade. Okay? We're looking at the US Japanese. I'm on the 4-hour chart. US Japanese, that's the pair. Remember, whatever's on the left side is the power country if it's on the left. So if US Japanese goes dollar is doing well, it's going up. And if the US dollar is going up, it's doing well. If the US is doing bad, this pair is going to go down. If the Japanese is doing well, it's going to take this down. If the Japanese dollar is doing well, like I said, if the Japanese is doing well, it's going to take it up. If the Japanese is doing bad, it's going to make this stock go up. This currency pair go up. If the Japanese pair is doing well, this pair will go down. If the Japanese is doing bad, like here coming down, that means this pair, the US or the Japanese, is doing good, because the one on the left is the power, US Japanese. So it just went up. It means the dollar was doing well today. It just went up. This is a 4-hour chart. It hit support. I missed this, but that would have been a great trade to get in. Put a pending order right here because of this right here and here. You have this support, this support, this support. It shows it's a good trade. So it went up. Now we're right in the middle. Should you trade or not? Heck no. You're in a non-trading zone. So you want to put a pending order here in this area, 112.87, and you want to put it in the pending order in this area at 111.98. So let's do that. $111.98. Oops, and put it pending. $111.98. It still didn't go. Okay, here we go. Pending order. $111.98. Okay, it's a pending order. You can put your stop loss somewhere up under, give it 50 pips. So you can look at the day chart and find out where to put the stop loss. But let me just put in the order now. Okay, now I have an order at US Japanese 111.98. Okay. Now I can do a US Japanese. That's a buy order, buy limit. I can do a sell limit at 112.87. Sell limit at 112.87. Sell limit 1. So if it hits here, it will hit the order and it will come, I believe it will come down. If it hits here, I believe the order will come up. So it's in the middle. For us, it's in a non-trading zone. The trend, what is the trend? Let's look at the trend real quick. Can you see what the trend is? The trend is up. It's going up here, came down, retract, came up, retract, and came up, starting to come up again. So the trend is up on the US Japanese right now. Here, you look at the 4-hour chart, it was coming down. Here. So we want to see a real, let's look at the day chart. Let's see where we're really at toward trend. Okay, perfect example. So this trend is up. Topped off here, retracted for a few days, hit this area twice. This is the same area we're talking about here. And why this was a good area, because we can see that when the trend is going up, the retraction is going to only go so far. Look at this. It's lower here. It actually went lower when you see it on the day chart. And you know it's an uptrend when the lows start getting higher. It's like it came, you know, the highs were getting lower, the highs were getting lower, but this is the retraction. Then it hit a support, which support is here. This is not a supply or demand. Supply is down here. This is the supply area here, somewhere down here. This could even be considered supply. This area here, all this area can be considered supply. What I mean by that is this. All this area could be considered supply. You just want to, orders are being taken in on the day chart. You just want to make sure you get it here. This would have been a good place too. Don't get me wrong. If you would have missed this area, this is the second best area. But however, as it went up, of course, this area for a serious supply, or this area is a demand, right? Demand area. When people want to buy. Here would have been a good area here. This was the best one, but this would have been pretty good too. Of course, this is a supply area. Perfect where it's a sell-off. And you see how it went down. Now, this is a support area. Support. Remember, you can make money on support or resistance or supply and demand. You just want to know where you are. This supply area, big money, and you will really see it on the 4-hour chart. All right, let's look at the hour. You really see it on the hour chart. Right here. Look at all that. Those orders being taken, especially in this area right here. Right here. And then wham! This is where we would have got in. I probably would have got in over here, but lock in, you see it, the orders coming in. That was great. And look how far it went down. From 1287 to 111.98. 112.87 to 111.98. Then it bounced up and went back on the trend. Of course, the hour looks like the trend is coming this way, but that's on the hour chart. You want to see the real trend, again, look at the day chart. But you get in your trades on the 15-minute or the 1-hour chart. Okay, trend is up. Retraction, trend is back going up. And remember, because the lows are getting higher. The lows are getting higher. Here it kind of tricked you below. here, bounce down, retraction, but you're going to see it continue to go up. The trend still going up. So, where does that leave us? We're in a non-trade zone. You don't want to trade right now, but you do want to put pending orders in. Pending orders in are great. US Japanese daily, we put it in we looked at the 4-hour chart where we got in at 111.98, which is somewhere around this area right here. What if it falls? You just get in another order. You want to put your stop loss in this area here. So you would do because this is a support area here, but this is another support area here. Pretty strong, by the way. If it gets into this area, you want to do a stop loss. So you want to do your stop loss at, if you got in at 111.98, you want to do your stop loss at 111.31. Out of the clear of the 64, probably about 111.31. So that gives you a 67, 68 pip stop loss. I actually probably maybe would do it up, in about this area. 111.31. Gives you enough time. So you take that Japanese buy, and do the stop loss at 111.30. Now you're protected. Okay? So if it goes down or up here, as in we do our take profit of 112.87. Here, because I'm looking at the day chart, I would change this because I think it's going to go up to 113.33. I think this is the new stop loss. Look at this area. I don't think it'll reach this area, but I think it'll come here and turn around. So I would change it to 113.45, and then I'll look. If it hits 112.87, I'll see what it's going to do. Sell position. I just don't want to trust it, so I would change that to 113. But I may do it manually. If I see it's going to hit and it's gathering, okay? If it's gathering in this area, if I see it on the hour chart, gathering momentum, but just because it hits it once, I got to see it hit 4 or 5 times. Then I'll see, it's orders being taken place. Other than that, I wouldn't. It's the trading area for now. Right here, but I don't know what I would do. But I look at it at least to come up to this point. And then if it hits here, 11.45 for a sell, and I would do my stop loss somewhere in here. Probably about, actually over top here, 114. I wouldn't go that high. Because I would actually put a sell in this area too. So I would do a stop loss, a short stop loss. If it hits here and clears 113.45, I would do it like 35 pip stop, right about 114, right in this area, 114.14. Just enough, because I don't want to lose my shirt.